My name is Qian. I am an investment manager on the Keystone Positive Change Investment Trust. Today, I'm going to provide a review of the recent performance, give an update on portfolio changes, and provide our outlook for the future. Before we start, as a reminder, the Keystone Positive Change Investment Trust is an impact fund with two equally important objectives: to generate attractive long-term investment returns for shareholders and to contribute towards a more sustainable and inclusive future. The trust invests in 35 public and private companies that are providing or commercializing innovative products and services for a better future. Those companies include Duolingo, the popular language learning app with over 80 million monthly active users; Northvolt, Europe's leading battery startup; mRNA pioneer Moderna; and Latin America's leading e-commerce and fintech company, Mercado Libre. Short-term investment performance has been challenging. Rising interest rate, supply chain disruptions, and geopolitical events have created headwinds for growth equity investors. A few companies also underperformed against our expectation. Those include Ørsted, the world's largest offshore wind company, which has faced difficulties in its US business. On the other hand, many companies demonstrated strong fundamental performance despite the challenging operating environment. For example, Remitly, which provides mobile remittance services that are cheaper and more convenient for users, continued to grow at a rapid pace and successfully gained market share away from incumbents like Western Union. Duolingo has been growing its active users, paid subscribers, and revenue at an impressive pace, and demonstrated operating leverage as it made good progress on its path towards profitability. Overall, in the 12 months ending September 2023, the median revenue and profit growth rates of portfolio companies continue to be ahead of the benchmark. More importantly, we continue to focus on the long term, and the progress of many portfolio companies over a longer time period remain robust. In terms of impact, companies in the portfolio are making important contributions towards a more sustainable future. In 2022, Tesla delivered over 1.3 million electric vehicles and deployed over 6 gigawatt-hours of energy storage. Those products enabled customers to avoid emitting 13 million tons of CO2 into the atmosphere. Dexcom, which makes continuous glucose monitoring devices, has helped 1.7 million people manage their diabetes more effectively. More information about the impact of portfolio holdings, including how they contribute towards the United Nations Sustainable Development Goals, can be found in our annual impact report. We made several portfolio changes recently. Tesla and Shopify had a strong share price appreciation this year, which presented an opportunity to recycle some of those gains into other holdings. We also sold M3, a Japanese online medical platform company, FDM, a UK recruitment and training company, as well as Daikin, where we deemed its exposure to white phosphorus contravened our controversial weapon policy. Those proceeds were reinvested into new and existing holdings. We took a new position in Wuxi Biologics, a leading contract research, development, and manufacturing companies focusing on biologic drugs. And we invested in Boston Metal, a private company that is commercializing a novel technology for producing green steel. We also added to a few companies that have demonstrated strong operating progress, including Duolingo, Coursera, and Remitly. The structural growth driver for companies that are contributing to a more prosperous, sustainable, and inclusive future are as strong as ever. For example, in order to keep global warming well below 2 degrees, we as a society need to invest more than $8 trillion in renewable energy by 2030. And while the near-term impact of higher interest rates is a derating of growth equities, the long-term impact could be more favorable. In an environment of more constrained financing, competition will become more rational. Inferior companies will no longer be able to sustain their growth by relying on cheap capital. In their place, well-managed companies with strong competitive advantage should start to gain market share and generate above-average revenue and profit growth. We remain confident that by looking for companies that are having a positive impact on the world and focusing on a subset of those who have strong competitive advantage or a realistic prospect of creating them, we will be well placed to generate attractive long-term investment returns for shareholders and contribute towards a more sustainable future.